So with that, it's time for our first panel, and this panel is on the theme Accelerating Consumer Adoption of Open Banking Payments in MENA. Now, to facilitate this panel, I'd like to say a warm welcome to Nabila Anouar, who is freelance editor at the MEA Finance magazine, who will be moderating this panel. So please give it up for Nabila and her panelists. There you are. The stage is yours.
Yeah, just go and sit. Hi, is this mic working? Yes, it is. Right, so I think you've got to move one step. Yeah. Thank you.
You have that one.
You can have this one, or you have that one.
Right, well, let's all sit really close to
Yeah.
We like the cozy panel.
Yeah, so, hello? Yeah. So we have with us today, to my right, Hisham Khalil. He's the CEO of Lean Technologies. And this is Gabrielle. She's from ADGM. And we have Tristan, that's from RAK Bank. So our panel today is about how we accelerate the adoption of open banking and open banking payments in MENA. So I thought I'd start with the basics, and basically what is open banking, why is it there, and what is it trying to solve? So Hisham, I think you could kick us off with that.
Hello, me?
Yeah.
Okay, good morning. I wanted to ask the audience a very quick question. How many people here are familiar with open banking? Show of hands. You know, people that kind of roughly understand what the concept is. Is this still working? Okay. So I'll give a
Try this one.
brief overview, and then from there we can talk about the use cases and what it's actually used for today and where the future is. So open banking is actually a concept that allows customers to share access to their bank accounts with third parties other than the financial institution. Came into inception in the EU under PSD2, and then since then is being adopted in multiple countries around the world. There's some countries that have taken an open ecosystem approach where banks and third parties are integrating directly. But in Saudi Arabia, for instance, or Bahrain, the regulators chose to impose these regulations. And open banking payments is essentially an offshoot of open banking, which allows a user and a third party to transact directly using account-to-account transactions. Now, you might be thinking, well, Hisham, why is that relevant? Well, the reality is it's relevant because credit cards and debit cards are extremely expensive. Oftentimes, merchants are paying upwards of 3% per transaction. And you can imagine 3% on 3% on 3% ultimately eats into the margins of an up-and-coming startup or a merchant. What we're trying to achieve in open banking and what the rest of the ecosystem is trying to achieve is to significantly lower the amount of fees that merchants are paying while also adding more convenience and an improved user experience to the whole ecosystem. So hopefully that gives you an overview.
Yeah,
then we can deep dive into the use cases and how it's going to revolutionize payments.
Yeah, so if we could talk about now the early adopters and use cases of open banking in the region. Perhaps, Gabrielle, you want to kick that off as well. Tristan, feel free to jump in whenever you feel like.
I'm going to comment on Hisham's intro. I think coming from the UK, actually the UK was at the forefront of instituting open banking, and it's important to understand the reason why it was originally mandated. And in the UK scenario, what had happened is following the 2008 financial crisis, the government realized that there was too much power concentrated within the banks. And one of the things that they really wanted to do was to lower the barriers to entry so that other participants could take some of the business away from the banks and also add new services. And so open banking was mandated, and there are different types of services, whether it's information on your account or whether it's the ability to initiate a payment. And why do I talk about that? I talk about that because in the context of today's conversation, firstly, Hisham and I said, let's have a proper discussion on the stage, not the usual uninteresting back and forth. And secondly, because I'm a skeptic insofar as the condition in this market is not the same as it was in Europe or the UK. And the underlying driver for establishing open banking, which was really about breaking up an oligopoly, is not exactly the same here. That doesn't mean the service doesn't have relevance, but I think it'll evolve based on very different rules and patterns. And that's why it's nice to have one of the representatives for the regulator here.
Well, I was just going to add on to that is that fundamentally, when you think about it, we're able to look in hindsight what happened with open banking, right? In the UK, in the EU, we have multiple years of visibility of how it has progressed, the use cases that have appeared, the changes, and how the regulators were actually able to put down the law of what they felt was better, and how they could push it forward. And if it actually did break up that monopoly, did it really break up that monopoly?
No, but it's enabled new entrants.
Exactly, no. And I think what we can also know is that the UAE and the Middle East in general is very good at leapfrogging. Leapfrogging is not the word, but yeah, it's very good at leapfrogging, right? Yeah. So having seen that visibility, having seen what happened, maybe being not fully convinced on the benefits, what should the Middle East do in that case where it makes sense for consumers and where it makes sense for actually people to use these services in a way that they can actually find a benefit, as opposed to just being told, oh, it's open banking, oh, you can connect your account, oh, it's cheaper, but it's not really cheaper for them, fundamentally. And so I think from there, it would be really good if, for instance, Hisham could really give us an example, because as a regulator, I'm not here to build business cases or business use cases at all, but give an example of where a consumer really finds that benefit. Like, why is it better for them to use or to get their payments through Lean?
Yeah. So look, I think the skepticism from the banking side is not something that's original or new. For many years, banks have been naysayers and doubting the merits of fintech, the merits of open banking, and the real threat that is coming via disruptors. So Tristan, thank you for the comment, but I would politely disagree. I would think that the Middle East right now is experiencing a renaissance of the digital age, whereby consumers are actually in the driver's seat, able to choose and dictate the services that they want to receive. Just to kind of give you an anecdotal point of view, 4 years ago, the Middle East ranked in the bottom quartile of fintech penetration around the world, both from a VC dollar perspective, number of fintechs per capita, number of fintechs per GDP dollar, and other identifiers. The entrance of open banking players, the entrance of players like Lean, has fast-tracked the adoption of fintech, of financial services, of digital services. You now see a plethora of digital banks, a variety of new entrants that are competing on the lending space, on the personal financial space, on the savings space, and the investing space, and the cryptocurrency space, and a variety of other providers. Banks are struggling to keep up with that. And I think what will happen is you will see a gradual and slow decline of banks. You will see a gradual and slow decline of the grip that PSPs had on the industry. So I'm here actually to declare that cards are dead, and that there is a new player in town, that account-to-account transfers will be a replacement for a dated technology that has existed for 40 years. And what we will see gradually as consumers and as players in the space is a true revolution that is happening. If we can just think about the very basic use case of topping up a wallet, it is absolutely ridiculous that new players are paying 4% or 3% per transaction every time a user wants to top up a wallet. As Lean, one of our top clients, has single-handedly saved over $3 million so far in 2022 purely by using Lean. And they've still had the opportunity to have their users top up their wallets using account-to-account transfers. Moreover, they now know about their users' spending patterns. They know about their users' identity. They know about their users' address. They're able to streamline onboarding and KYC. They're able to streamline a variety of other aspects of the user journey. So, I think it's still early days, but hopefully we'll see the proliferation of this method of payments across a variety of different industries. And I'm very excited to have this chat in a couple more years, Tristan, and we can check back.
Tristan, I think you're itching to rebut that comment.
Look, I mean, if you're going to build a startup and try and have impact across the whole region, you have to be bullish and you have to back yourself. So, Hisham, good for believing in your own story. Now, what's interesting is actually Hisham announcing that cards are dead. The reality is he can only be here because cards exist and because there are interchange fees that are sufficiently attractive for an entrant to come in and reprice and offer something different. I do concede that there is a very active evolution in terms of the way in which transactions occur, the place, the growth of marketplaces, and new forms and formats of engaging between businesses and consumers. So I think in that respect, it's not relevant or credible to stand in the way of that progress. So for that reason, I think what you're advocating has there is a need in the market. Ultimately, the challenge obviously lies in where the adoption comes from, whether it's as a consequence of build it and they will come, or whether it's driven through regulatory mandate, or whether it's as a consequence of establishing an effective partnership that then gets you that, that critical mass. So I think in a way we're kind of looking at two sides of the same coin. And for the banks, where the challenge always comes is we have more of a sense of scarce resource, and therefore our ability to interoperate with someone like yourselves comes down to the trade-off decision of, okay, in the near term, how easy is it to prioritize working with Lean? And to a large extent, actually, Lean's business model doesn't depend on us. They can do a vast majority of what they need to do without our direct support. But I do like the bullishness.
Well, as a regulated financial institution, what do you expect to see from regulators and enablers like Lean Technologies? What do you see as the ecosystem, and what would it look like?
Market-driven or regulator-driven?
Yeah.
To my mind, particularly insofar as this region, with something like open finance, is not a leader, and there are well-evolved models in other countries and regions that we can essentially leapfrog or replicate. I do think it comes down to a decision of whether or not, at a national level, we believe that there's value in this particular service. If that is the case, then I think my preference is for the regulator to be proactive. Regulating post-event is never, I think, a great scenario. And so, for example, the way that Lean work, they reverse engineer APIs, and then they, on consent, they take information that we hold. There are conversations about should we block their use of those APIs, and the answer is, well, we don't know, right? If Hisham is he doing something wrong? Is that not allowed? So that ambiguity means that in one scenario he builds a successful business, he's got customers who are saving $3 million, and then the next day some of that's turned off. So I think that that's not a good situation. Because then it injects instability, it injects uncertainty. And so I do think that let the evolution take place and it'll sort itself out market. I don't believe that's the right thing unless there's a view, well, we don't really want it. And I don't think that's what the view is on open finance.
Hisham, what are your thoughts on that?
I want to hear Gabrielle's thoughts in a minute. But
okay, sorry.
I think just to kind of answer the last kind of hypothetical, Tristan, it's way more difficult to turn off the spigots than might be anticipated. We're more than happy to move towards kind of a full kind of bank partnership, regulated ecosystem. I think reality is there's a fair amount of resistance on the banking side towards openly collaborating and accepting the fate of the evolution of the fintech industry. So we're well positioned to partner with any leading financial institution in the region. Our doors are always open.
Gabrielle, what are your thoughts on that?
Well, So one thing you guys may not know, which is actually very, very interesting, is that Lean is actually a tremendous success story for us at ADGM. When it comes down to it, Lean and a number of other open banking players were in our reg lab, so our sandbox, for a few years before we even had frameworks, guidelines, regulations on open banking at all, on open finance, on embedded finance. We had nothing. So they had a testing license. They had a license to actually, work and, put out their services. And over the years, and it wasn't that many years, I promise, but it was still, how much? 18 months, 2 years? It was still 20. Yeah, it was still 2 years. We were able to actually see how they worked with consumers, how they worked with their partners, the volumes, the transactions, everything. We worked hand in hand to really look at their business model, better understanding. And through that better understanding, through what we learned, we were actually able to build up our framework for open finance and our framework and for TPPs, for PISPs, etc. And now, actually, I don't know if you want to say it or not. I go ahead? Okay. Lean is actually the very first TPP, so third-party provider offering, doing open banking and such, and offering these types of services that are licensed by ADGM. So fundamentally for us, it's a success story for Hisham, but it's also a success story for us because we were able to put out these frameworks and these guidelines. And now when others want to join and when others want to be regulated, it's in place, it's there, it's structured out, and they can actually follow these guidelines in order to put out their services to consumers in a way that consumers can feel safe, they can feel protected, they can know that they're working with a professional and respectable player.
Can we just kind of pause there and get a round of applause for ADGM very quickly?
No.
I honestly, from the bottom of my heart, you have to understand, we've dealt with almost every single regulator in the region. We've built our business from the ground up. I take no credit for this. First and foremost, the team that I have at Lean is one of the most thoughtful, hardworking, daring teams that I've ever seen in my life. But also to have regulators like ADGM and the FSRA who are actually forward-thinking enough to be able to take a risk and actually understand the value proposition that open banking and open finance has for the ecosystem fundamentally is something that is really worthy of noting and celebrating. And we feel incredibly blessed and fortunate to be the custodian of that faith and that excitement. So hopefully what's going to come is we're going to see many more regulated players by the FSRA. We're going to see a lot more engagement from banks. We're going to see a lot more benefit for consumers, for SMEs, for the ecosystem. And this will be a monumental milestone for years and decades to come that we will look back on and we will celebrate. So yeah, I'm very happy we announced that.
That's nice. But also keep in mind that open finance it's in the name, it's open. So we need that ecosystem. We need those players that are all, attached and committed to this. Even Tristan, we need him.
No, I don't think that the banks are resisting. Maybe to clarify the point, because it's quite important, what I'm trying to explain is that for regulated entities, our risk tolerance is not the same as entrants who are in a growth and expansion mode, which is obviously natural. And I get Hisham's assertiveness. At the same time, success lies in finding a way to create the incentives and motivations if there is a dependency on the banks. In reality, I think there's a limited dependency which enables him to progress. But over time, having confidence as an individual or as a consumer, as a small business, that these services are reliable, are underwritten, are sanctioned by the regulator. Obviously, that's fundamental. And then our role, and if the underlying value proposition, at least in payments commercially, is to make these account-to-account payments. For the banks in those circumstances, the reality is it kind of works for us, right? So long as there isn't some manipulation of the fee structure. If the better payment service provider comes out there, then we'll work with them.
Do you remember back a few years ago when they kept saying, I don't, you weren't in the UK at the moment, but I was at that point. And I still remember that the banks kept saying, oh, we don't want to be, just rails for payments. We don't want to be just, completely, we don't want to be there anymore where it's just connected.
It's somewhat inevitable, right? That unless the concept of banks owning all points of interaction and transaction with customers is just not credible. way in which the economy is evolving is not directly orchestrated in having these single points of access. And by the way, the marketplaces are very aggressive in what they want, right? So I don't think it'll necessarily happen at the speed that some commentators might imply. But yes, we will see, and I think we need an open finance layer to kind of remove the blockages in some of the and the friction that is limited value to our economy.
Coming back to the question, I mean, that all obviously plays a role in making the ecosystem work, but I just want to throw this out here. So how do we actually accelerate consumer adoption of banking, open banking in the region? Well, don't everybody just jump in.
Yeah, I mean, obviously you accelerate it by building innovative businesses and merchants and apps and use cases.
A product that people want to use.
Yeah, exactly. So we can do our part as a technical service provider, as an aggregator, by building the layer of the infrastructure that's needed. The regulator can set up the framework. The banks can be an enabler. But the reality is we're looking to you to build the use cases and the actual applications. Dubai is open. The Middle East is open. It's ready. It is vibrant. It is a thriving ecosystem that is, in my opinion, one of the most promising in the world. And this is an invitation for everyone who's willing to take the risk and really have the leap of faith and the courage to build a business to come and do it today. Now is the time to build, and we're here to support.
The only thing we can really do, which is our fundamental role, is to give confidence to people that it's a product that they can use. There's nothing more to it, really. It's confidence, pure and straight.
Okay, cool.
Yeah, I agree, and to an extent, right? What Hisham is providing, to me, a certain amount. The analogy is what happened in open source, right? So it's you provide a capability for people to tap into and commercialize based on their interpretation. So he's an enabler, or lean technology is an enabler. So I think that ultimately the answer is in that innovation and activity taking place on top of a solid engagement framework and technical backbone that makes the fintechs and new service providers confident they can build those.
Okay. I'm not sure if we have time. I think we have a couple minutes. I was wondering if we could take questions from the audience, if anyone feels like they have something else. Yeah. Can we get a mic over there, please? Yeah, thanks.
Yeah. Just wanted to ask about how do you take care of this GDPR thing in case of the open technology? Because if third party is accessing my data, I'm talking from the European angle. How do you address that, or do you get a consent from me before going to using that to get my data?
So there's a consent flow that happens when every user connects every bank account to any third party, and once that consent is gathered, the third party is mandated to abide by the local data localization laws and data privacy laws and various other regulations associated with open finance. It's pretty well established in the EU and the UK, and what we've done here in the UAE is pretty world kind of leading in terms of the regulations. And I think it takes the customers some time to get used to the concept of sharing their data with a third party, but I believe it's only a matter of time to see mass adoption.
Do we have any other questions? Yeah, we have one in the back.
So this question is regarding the use cases, specifically on the embedded finance supported by open banking as well. So when it comes to these use cases and moving forward with them,
Mic doesn't seem to work. Microphones are running out of battery.
yeah, apologies for that. So the question is really regarding the use cases and the concept of embedded finance and open banking. So let's say we're trying to implement a specific use cases, and conceptually the architecture, the reference architecture, connectivity to lean and the banks looks nice and workable. Then you go to the regulators and you validate the regulators will endorse something like this, right? And the regulators come and say, no, we cannot allow it because for certain regulation concerns that, we cannot enable you to do this. So in the use cases life cycle, where should we engage the regulators? Do we bring them in at the start before we make any investment in terms of implementation, even design thinking, conceptualization, or do we invite them to come in later? Because if we invite them to come in later and they say no, that's a lot of effort wasted.
I think there's a middle ground, unfortunately. If you come with an idea, there's only so much we can comment. If you come with a prototype, then we can actually talk and actually discuss where it fits in. But I think one thing that people tend to forget, especially when they come speak to a regulator, and that's always why it's been nice working with Hisham and his team, is that often we have companies that come to us and they just want to sell a product, right? What you need to stress is why your product is beneficial to others, to consumers, to retailers, to the ecosystem, right? And there, it's a lot easier to explain why, a product should exist and why it should fit in, and why potentially, if the frameworks aren't in place, they need to be put in place. Hisham has always been very, very passionate about explaining that, okay, we can lower costs, we can get this product out to more people. There is a benefit to society in it. And that's something, there's a way of speaking about your product and a way of speaking about your prototype that can get you much further than just coming in with, let's say, an idea.
Okay. Do we have any more questions? I could just wrap it up.
I might have a question of Hisham. So, Hisham, you've been engaged on this journey for a number of years, and it's not a revelation that there are examples of organizations, whether it's Plaid or TrueLayer, who've done something very similar in other regions. What are you anticipating will be different here from what they've done?
So for those that don't know, Plaid is the leader in the US, TrueLayer is the leader in the UK. There's another, few dozen players in the EU. Why is Lean going to be unique in the region? We have a principle at Lean that we're inspired by others, but we never take that for granted, and we really have to think for first principles. So we are a hyper-localized, hyper-focused company that really does not take for granted the culture, the norms, the regulations, the standards that exist in our region, because ultimately there are vast differences between the Middle East and the UK and the EU and the US. There's vast differences between the regulators here and the regulators in the West. The second is, it's a far more fragmented industry. You might think, Hisham, no, it's not. There's less banks. Well, yes, there are. But the reality is there's multiple regulatory bodies. There's multiple schemes. There's multiple data localization laws. There's multiple, infrastructure layers. In the EU, you can get one license and immediately get access to 20,000 banks. In the region, you actually need to go through the painstaking process, and I'm sorry to call it painstaking, but the painstaking process of 2 or 3 years of engaging with a regulator until you can get a license. Now, ADGM was actually quite, helpful and collaborative, but not all regulators are like that. And so what we see as an opportunity, but also, a moat, a barrier to entry, is actually that kind of that friction that you have to get to in order to get established. And so, I look at the downturn that's happened recently. A lot of companies slashed valuations, but also they reduced hiring plans. They pulled back on expansion strategies. And so I actually think of it as a silver lining. We're going to have more time, a more uninterrupted breathing space where we can continue to operate, continue to experiment, continue to be the de facto leader in the open banking space across the Middle East. And hopefully with that, we can engage better with our clients. We can learn more from our customers. We can build better partnerships with banks. We can build a more tailored product for consumers and ultimately be the best provider for the Middle East. And that is ultimately our ambition. We don't want to go to the US. We don't want to go to the EU. We want to keep our focus at home, and we want to build localized products for localized customers and be the leader here.
Okay, just to wrap things up, I think we're running out of time. If there is one thing if there's one thing that's crucial that could accelerate open banking and make it mainstream, what would you say is it?
So I think regulatory engagement is a massive critical step. Regulators need to be forward-thinking, need to enable the industry. I think banks need to get over the fact that open banking is not going to happen and just accept it as a reality and start to engage. I know, by the way, I tease Tristan, but Rack Bank and Tristan are actually very forthcoming and engaging. They're very collaborative and they're one of the best. But I do think the rest of the ecosystem does have to take that leap and understand that collaboration and partnerships is necessary. And then we're looking towards you, the customers, the SMEs, the merchants. You guys need to become a little bit more engaged in the ecosystem. What we're seeing so far is massive, but I know that the best is yet to come. We're here to support.
And Gabriel?
I think more regulators need to be able to jump on the bandwagon as well and realize that their input is very, very important to actually get this ecosystem going, and that we can't stop consumers from using these products.
Yeah, so just to close it out, so Hisham and I caught up a couple of weeks back, and we were discussing the process of getting further support and what our bank would do in that respect. And I said, look, the challenge really is that 90% of the work to make that happen has to happen from the entrant. So the bank is not necessarily going to reach out and try and figure out the value proposition and how to generate new opportunities for all sorts of logical reasons. So I think from our side, we are very much open to being a participant, a facilitator. Everything that Hisham says, I agree with. The level of engagement with the banks, ultimately, there will be a relationship that is that augments what he can provide as a service to his customers, and that may well be with us. Otherwise, one way or another, he's pretty relentless. He'll get there.
All right. So I guess that concludes it. I hope everybody enjoyed the session. Thank you very much for your time, guys.
Thank you so much to the panel. Thank you for a very open, honest, and really engaging conversation, I must say. And it's always good when you have both stakeholders at the table, so thank you. Okay, so we already touched upon regtech, or regulatory technology, and that's what we're going to dive into in this panel. Because regulatory technology both digitizes and automates operational risk and compliance processes, really providing technologically advanced solutions to the increasing demand of compliance. So we're now going to have a panel to dive into this, sort of aligning tech and compliance for maximum operational impact. And this is going to be moderated in very good hands by my colleague Simon Hardy, who is CEO and founder of Findexable, which is a financial innovation and analytics consultancy working with ecosystems and institutions to really help them scale their ecosystem and innovation programs. So give it up for Simon Hardy and his panelists.
Thanks, Lavinia. Thank you very much. Hi there. Can you hear me? Yep. Very good. Please join me. So welcome. Why don't you sit there? Alex, we have you here, and Ahmed, you sit you at the end. So good to hear from ADGM just now. Welcome, everybody. Yesterday, we talked with regulators on stage here. We had three, I don't know, for those of you that made it yesterday, we had three regulators on stage from the kind of three most progressive fintech markets in the region, talking really about the value, the importance of regulation, not just to the system, not just to consumer protection and managing risk, but also the opportunity that it's creating, that smart regulation can create in building innovation and creating jobs and opportunities. Today, we're going to look a little bit, we're looking at a different direction. We're going to focus really on the regtech opportunity itself. Obviously, regulation plays a massive role in supporting the development of regtech markets. But today, we're going to focus on the innovation opportunity around regulatory technology. Look a little bit at the regional context. What is the opportunity here for innovators, and some of the challenges of scaling regtech businesses in this region and globally. So perhaps first of all, we just get a sort of sense of who we've got in the room. Who here works? Put your hand up. Who here works for a bank? Who here works for an innovation company or a regtech or a fintech? So sort of mainly an innovation audience. So look, great combination of panelists here today. We span central banks, fintech, central bankers, regtech companies and people that have come from banking. So this is your opportunity also to ask questions. Please make sure that you know, if you want to ask a question at any point during the session, please raise your hands. Alex, I want to come to you first. What is the you're a central banker by trade, but by background, but also now a consultant with various organisations. What does the regtech opportunity look like, for you from where you sit in the Netherlands?
Well, I think we first need to have a look at what is the global market for this. If you look at our regular financial institutions, we see that they spend globally around 200 billion every year on compliance costs. So we're talking about a tremendous opportunity from that perspective, because regtech tends to address this. They tend to provide solutions that may help reducing those costs. Now, the global regtech market is much smaller than 200 billion. However, we're talking only a small fraction, depending on who you ask. But probably the global regtech market is sized 5 to 10 billion total size globally. That means that there is a tremendous opportunity out there for these companies to have a massive impact still, because it's only still such a small market compared to what is really needed to bring down those compliance costs. Now, from a more local perspective, I must say that I'm from the Netherlands, so my best point of view is also the Dutch market. We tend to think of ourselves as being ahead of the curve.
Yep.
But at the same time, what I see is that a lot of companies aren't that far. They aren't that far ahead of the curve, because we still see client files being printed, so on paper, not even digital. We see companies that have barely migrated from Windows XP.
Yep.
So from that perspective, even in my local market, despite us thinking that we're pretty advanced, and we do have some reasons to think or to be a little bit proud of ourselves there, because we do have some guidelines on, for example, how to deal with AI in compliance and stuff like that. But that actually being applied is a whole different matter.
Yeah, absolutely. Barbara, you've also sort of switched sides, so to speak, having come from, I think, UBS, you mentioned, now working in a scaling regtech company. What's that transition been like? What were the motivations for you personally to switch sides? And what do you see, at CoinFirm as the regulatory opportunity, in the markets that you're in, or indeed in markets that you're looking at?
Well, first of all, the switch that I've done from investment banking compliance into regtech was something I had no idea about like 15 years ago. So 15 years ago, when I started my career, there was just a handful of IT vendors available for banking, and we haven't seen the numbers that you've just quoted. So I guess the key takeaway from my side is the space is changing so much that we may not know still today where it's going in the future.
Yeah.
So whenever I look at different forecasts for regtech, I think to link to your numbers, there are some forecasts about regtech growing to 10, 20, or even 30 billion for the next couple of years, depending on which report you're reading. I think the consensus is that the sector will be growing. In terms of the specific numbers, that depends on various reasons, various aspects. I would say for fintech, for regtech specifically, it's very closely connected to fintech development. So from my experience in banking, there's, let's say, a limited amount of solutions that banking needs. In terms of the fintech, they're much more open for the regtech solutions. So I would say one factor is the fintech growth. Another factor is the regulations. So regtech obviously responds to changing regulatory requirements, and depending on where those regulatory requirements go, new solutions may come up. Just to touch with your first question on my move, it's something that I would say requires a lot of say mind shifting. I think going into technology, you have to let's say, open yourself to understanding the technology. I've gone to the limit of actually doing software development diploma and coding myself. That's not necessarily what you need to do. I'm seeing a lot of talented individuals moving from banking, from fintech to regtech, and that works. So it's the growth of fintech is also opening a lot of career opportunities that we haven't seen before.
Yeah. I mean, just wanted a quick follow-up question. Actually, you mentioned an important point. Can you hear me? Okay. It's an important. You mentioned there the potential size of the market differs. I think you can't hear me. You mentioned an interesting point there. The sort of potential market size is different depending on which report you read. I mean, that's largely because the kind of lines are blurred, aren't they, between what is fintech and what is regtech. Do you think that matters? Do you think the spinning out of regtech from fintech does it need sort of clear rules around it so that regulators know who to go to?
I think there's definitely not, let's say, crystal clear definition of what regtech is. To give you one example, there are many fintechs and also banks who develop their own regtech solutions. Do you count that into regtech growth or not? Because it's a proprietary solution. So certainly there are some peculiarities within the regtech definition itself. I think though that regardless of like wherever you look, the growth is certainly there. I would want to point out, though, that the growth of the sector does not necessarily mean the growth everywhere in regtech. So where I come from is the compliance perspective, and one of the things I've done for a different regtech, not for CoinFirm, was develop KYC solutions for banking. Now, over the years, we've seen a decline in actually KYC solutions demand from banking because the market got saturated. So I think being in a regtech market, it's extremely important to be agile and to be flexible, adjust to the market needs. So I had to go through that myself, where I'm focused on the AML, and at some point I just had to be flexible and go into a different direction just to respond to what the market needs.
Yeah, okay. Thank you very much for that, Barbara. Oh, thanks. Always have sound problems at this event for some reason. It's disappointing. Does that work? Very good. Ahmed, let's turn to you. We spoke a little bit before we came on stage here, about your business, about your company. UK founded, I believe, UK based. You're here now in this region. I think relatively new in this region, but clearly, you see opportunities here. What does the regional regtech or customer opportunity look like to you, relative to the other markets that Shufti Pro is in?
Sure. So regardless of the market, whenever we talk about aligning compliance and whenever we talk about aligning technology together, I believe KYC and AML are the key elements to that, Simon. Because adherence to different regulatory requirements around the world, if we talk about specifically the MENA region, DIFC, DFSA, if we talk about globally, GDPR, PCI, and if we talk about different privacy X, they are formidable, right? So having a right solution for all your requirements where you can, make sure that the onboardings are done smoothly, where you make sure that the customers you're onboarding, they are who they say to be, they are not involved in any kind of money laundering activities. And you, as a business, have the proof of verification saved with you for the future regulatory requirements and references. So I believe it not only adds to the growth of the company itself, but it also helps in improving efficiency and enhancing the reliability of the business. Because by the end of the day, you provide those reports to different regulators around the world, and based on those regulatory requirements, you find a service provider that fits your business requirements in a positive manner.
Good. Let's go to the audience. Do we have any questions for our panelists? Ask away. It's your chance, your opportunity. No? Do we have any regtech companies here, actually? Just come to you. I was going to get a comment from... are you in the region or...?
Sorry?
Are you based here? Or is your...
Yeah, I'm in Saudi Arabia.
Okay.
So my question is like,
Just a bit closer, sir. Sorry.
yeah, how do you see like blockchain playing into the, the bigger picture over here? Like, how do you see it relating into this? I'm sorry
Well,
if it's out of the context. But,
Well, it's not. We're going to come to that at the end. If we can come back to,
Yeah, okay.
unless anybody wants to have a. I think Barbara, you. Oh, there's Martin. It's a blockchain question, so we'll come to that. We'll come back to that. We'll come back to that in the sort of next round. Both these guys have got experience in that area, so we can touch on that at the end. So thank you for that. Let's then look at the sort of some of the practicalities and obviously the challenges for regulators in what is now a very really quite a fluid market. It's quite volatile economically, macroeconomically. Where do you think are the challenges for regulators in understanding how to enable the regtech markets to form? Because clearly, in this region, we have regulation. The regulators are moving at different speeds. Western Europe, the US, taking a sort of more sort of proactive view in the role of regulation in enabling markets to form. What's the central bank view of how to build the regtech ecosystem? What are you looking for to make this market work in the favor of both consumers and the system?
I guess from a regulator perspective, it's important to not obstruct any regtech solutions. I think that is the biggest thing, because as a regulator, we are typically not the innovator. We are not going to be the first to adopt any new technology. That is just not what regulators do. We are responsible for making sure that institutions live up to the requirements they meet, or they successfully have their compliance processes in order. How they do it is up to them. So if they want to innovate in there, they should probably have the freedom to do it. And I think that is, from a regulator perspective, you should be having sufficient room to be able to do that kind of stuff. If you have a regulator that says, I want you, you're doing this and I want you to keep doing exactly what you're doing today, then you have a bit of a problem. I think in my home country, we're pretty flexible. We allow institutions to pick their own way in which they live up to their compliance requirements, and then we respond based on what they come up with. So if they want to use some advanced technology, if they want to start using machine learning, AI stuff, they should have the opportunity to. But then, of course, we're going to look critically into that development, and then it's up to us to come up with some guidelines to make sure that we don't kill the innovation, but at the same time make sure that we can still audit it.
The sandbox model, has that worked for you within the Netherlands?
There are sandboxes. For example, in the Financial Markets Authority, they have a specific sandbox designated to just play around, and I guess it works. But at the same time, getting out of the sandbox might be a little bit harder.
Right. Okay. Yeah. And the relationship that you have with the sort of the fintechs that are coming to you, I mean, has that got, has the bank become more receptive to having a stronger, better relationship with regtech?
Yeah, I think so. We are very open to improving our first of all our own processes as well, and there we can also work together with stuff. But the thing is always, if you work for a government institution, if you want to do anything, you have to put out a tender. Anyone can respond. It's a really slow process before anyone gets implemented. So even though we have positive experience with talking to parties, it always takes us some extra time before we can actually do something together.
Barbara, let's turn to you, and then Ahmed will come to you for a follow-on similar question. We were talking a little bit before about how you build these businesses and how you build sort of strong relationships to make them succeed. What does that look like in practice for a company like yourselves?
Strong relationships with the regulators? Or?
No, with the customer. The practicalities of sort of of scaling the operation. How is that going for the business?
Yeah, so I think what I'm seeing across regtech sector is a mixture of companies who are responding and listening to their clients versus companies who have the visionaries and believers in their own idea. And it's a delicate thing, really, because if you set up your company, your fintech, regtech, you may have a vision that something is needed at the market and that something will work. Then you come to the market, and it takes a little bit of, let's say, courage, but also self-acknowledgement to recognize if your idea is not working. And I think it's very important to be able to kill an idea at early stage if you see from the customer's perspective that your regtech solution is not necessarily what they need. So really the listening skills here is the key factor, and trying to find out from the customer feedback what is actually that they need, what they respond well to, what works for them. And just if I could come back to your point about the regulators and the question you've asked, I think what we're seeing in our space in terms of the cooperation with the regulators is they're not having. I'm quite sympathetic to them. With the amount of regtech solutions at the market, they do need a little bit of expertise, especially in cases like blockchain analytics, to actually review the software solutions from their regulated entities. However, what I'm also seeing, at least in our space, is that the regulators, even though they cannot point out to a specific solution, they do have the power of sending, let's say, underlying messages to the market. And if they say, maybe not endorse a specific tool, but if they give comments about specific solutions, it's very quickly absorbed by the market. So there's this delicate line of trying to be open to different solutions versus not being favorable towards one or two solutions at the market.
Well, we'll certainly come to that in a minute, because of course the whole crypto blockchain space is something that regulators everywhere are kind of taking very different approaches, understandably, and having to be very cautious. Perhaps first, though, Ahmed, let's come to you for the question. One, relationships with regulators for you. What has that looked like? You're in multiple markets now, and now you're here. And what are the sort of the practicalities? I think you were talking before about you need to innovate at pace. You need to deliver solutions at pace. But you've also got to build a relationship and not innovate too fast, haven't you? Because otherwise you kind of lose the trust and the confidence of the customer.
Right. So talking from a regulatory perspective, Simon, as you mentioned, I've been working in different markets now, dealing with different regulators. So the thing that I have realized specifically in the GCC region is that the regulators and the subsidiaries or the banks that fall under the regulators, they need to be on the same page first, right? So we together have to make sure that the regulations that are passed by the central bank, it could be of any country, they should be easy for the subordinates or the subsidiaries or the different banks so they can adhere to that. Talking from another perspective, for example, let's say if we make a regulation today that you have to verify your businesses or the customers you onboard to, let's say, ABC data source, right? Now, that data source is provided by the government, but not every company in the region has the access. So again, there are only 2 or 3 big giants. They have the access. So we are killing innovation here, right? We are killing chances here for different organizations to pursue and come up with new ideas. Now, talking about the customer success and the growth, I totally agree with Barbara. She mentioned that listening counts, understanding your customer concern, making sure that you are providing a solution that fits to their business requirements is the thing that counts the most. And talking about the innovation, I believe you have to come up in the market with a solution that fits all the business requirements. But certainly, then there are certain instances where businesses come and they have a different requirement. So your solution should be customizable. So you should have the ability to custom tailor the solution based on the client requirements in order to be present in the competition and in order to make sure that you stand alone from the rest in the market.
Yeah, it's a process, isn't it? I mean, you win the customer and then you can start the relationship, really.
Of course.
Now, I think you said you're relatively, you're new in this region. Who are your customers? What's the customer span look like?
So in the last 3 months, we have partnered up with over 10 companies from this region. This includes banks from Jordan. This includes a very renowned cryptocurrency exchange in the region. This includes an insurance company in Dubai and a bank in Dubai as well. So we are striving best to make sure that the businesses in the region, they have the latest onboarding experience, again, which adheres to the regulations by the central bank of the UAE and of course the central banks of different countries as well. So what I've realized is when we talk about the complete GCC region, if we can make sure that the banks, the regulatory bodies, they are on the same page, then we would give more chances to the companies like us so they can come and, come up with different innovations. And at the end, customers would be getting benefited through those advanced and automated AI-based solutions.
Yeah. Well, you raised an interesting point there on the same page. As I say, we had a panel yesterday of 3 regulators from the region. But the region as a whole is moving at a very different pace. Certainly, the Gulf region. Some markets are really racing ahead. Others are not so sure. The challenge, however, though, is that harmonization is quite a way off in reality.
Absolutely.
Is that a problem for you, or is that perhaps an opportunity for you as a regtech company that's now here and in this space selling across the region?
Well, being a regtech company, talking about different regulatory requirements, it is an opportunity, but sometimes it turns out to be a problem. It turns out to be a problem how? Because let's say if Central Bank of Qatar came up with a regulatory requirement where they have this gateway that you need access to, then again, as a regtech company, you have to be physically present in Qatar. You need to have an office in Qatar. Just giving an example, right? To get access to all those gateways and to make sure that you are compliant with the regulatory requirements. So this is a challenge. But when we talk about other regulatory requirements where it's merely very easy for the companies like us to get access to each and everything following different procedures, protocols, then it's relatively easier for us to serve that market and to provide them with the AI-based solutions that help their clients to undergo a very smooth and reliable customer verification process.
Thank you very much. Let's now then turn to kind of the final few minutes of this session. We had a question there about blockchain standards and regulating for the future. We're here. Dubai wants to position itself as a hub for the future of money. Really, they've launched the Virtual Asset Regulatory Authority. There are other central banks in the region that are piloting central bank digital currencies. What's the sort of Western Europe, Netherlands perspective on the need to regulate for this kind of this sort of next generation of the digital economy?
I think this is a really nice example to look at because in the Netherlands and in Europe, the regulation of crypto asset service providers is very new. In fact, just last year, they all became regulated. So now these companies have to register themselves and they have to live up to anti-money laundering and counterterrorism finding regulations like all the other institutions. But this is super recent development. And they're bringing a lot of new things. For example, you're dealing with a very new system that's running on top of a open blockchain technology where anyone can at least observe the transactions actually happening on a blockchain, which is something that we don't have anywhere in any other financial system. So that is very interesting to start with. And then you see both new challenges and opportunities appearing around that. And in terms of challenges, obviously we have seen a lot about how these crypto assets are potentially being abused to send money to people that shouldn't be receiving that money. But at the same time, it also gives rise to new providers, like, for example, a company like Chainalysis, which is a company that tries to de-anonymize the transactions that go on this pseudonymous blockchain. And they're pretty effective at that. Huh? So they are a solution provider, and they provide anyone in this space, all these companies, with the ability to see what their customers are doing on a open blockchain. I think that's a really powerful development. So for example, if your customer is receiving money from a known darknet market, you can immediately just freeze their funds, send it to the relevant authorities, and it's perfect. At the same time, we also see that they tend to overpromise a little bit in terms of what they are ultimately delivering, because if you on an open blockchain observe money going, for example, from one major exchange to the other major exchange, it doesn't reveal anything about who is the party at that platform. So in that sense, you still are limited in your ability to see, but you can see a little bit more than what is usually the case. Like if the example I gave, if there's ever a transaction coming from, has Silk Road in the past, I don't know the darknet markets nowadays, Silk Road has been rolled up, maybe there's a 2.0 version, but if you see that kind of stuff happening, you can immediately apprehend those people, and I think that is at least a development that's worth celebrating. Although we have to realize that as a regulator, we have to understand that. We have to see the opportunity here, but we also have to point out the limitations there, that if institutions are applying this new technology, they're not done yet. They still have, we're still expecting something more of them as well.
Barbara, here yesterday, various sort of talks about crypto, blockchain, new rules evolving in this region. How do you see the opportunity for you in this region versus other markets at the moment?
So just to recap, Confirm is a blockchain analytics company as well, like a similar one you mentioned, Chainalysis. We do similar thing differently, but basically we're tracing assets, crypto assets, and we provide various solutions to meet the anti-money laundering requirements for crypto assets specifically. Now, in terms of the opportunities, I think opportunities are mainly where the market is developing and where the market is properly regulated. Now, there's, just like we discussed before about different definition, the definition of properly regulated would be different depending on who you ask. I think specifically for the region here, it is extremely, in my view at least, important to make sure that that regulatory ground is set to the level that allows innovation, that brings new businesses, but also that is recognizable internationally as a strong jurisdiction. And I think that's a big challenge, but an opportunity at the same time ahead of the region to make sure that that regulatory basis is there. And from our perspective, from blockchain analytics, I'm absolutely convinced that every single virtual asset service provider needs blockchain analytics to be to properly hedge against the risks. So opportunities for us will be in line with the growth of virtual assets providers registered and regulated in the region.
Do you see, based on what you're learning here, and seeing here and in other regions, do you see it as sort of, or feel as a real opportunity, as an innovator in the space to help help the regulator form these new rules?
Yes, certainly. Of course, I do, and I think the opportunity for the region is enormous. That I'm basing on the fact of there are some regulatory frameworks already in place. I come from the European Union, where just like we mentioned before, the regulatory framework is already there. At the same time, there are a number of companies who have, let's say, unpleasant experiences with those regulatory frameworks. So if the region here is able to create the environment that supports the companies from the very beginning, that has open communication, that has discussions and innovative approach, that is going to work. There is a big disclaimer though. The time span for that is very short. So I think the region needs to act quickly.
Perhaps a final couple of words from you, Ahmed. What does the future hold for Shufti Pro, in globally, but in this region? Are you looking at the crypto blockchain space in the round as a kind of as a place to move next, and to move, exactly as Barbara said, to move fast into?
Right, Simon. So as you know, that it had been 3 months that we are here in Dubai, in DIFC. But even before that, when we were present in UK, States, Cyprus, and Sweden, we had a number of customers here in Dubai. So coming from that perspective, the regulatory bodies are um, changing the requirements quite frequently, which are enabling these companies to stand up and look for the right solution provider available in the market, right? So talking about the growth, I do see a very good opportunity because whether you talk about a blockchain-based platform, a crypto exchange, a bank, an insurance company, or let's say a platform that's based on the gaming, uh, every platform needs to onboard customers. And whenever they need to onboard customers, that's where we kick in and we make sure that their customers are who they claim to be they are, right? So we restrict fraudsters and imposters to gain unprivileged access to their platform. And it's beneficial for them as a business. We simplify their onboarding journey, and within 30 to 60 seconds, we make sure that their client is onboarded, which eventually helps businesses around the world and even in this region to maximize their ROI.
Just final words. We must close it there. But just a quick statement from each of you. If we come back here in a year's time, what will we see on the certainly on the sort of CBDC crypto front? What will we see where do you expect we'll be in a year from now?
Well, I expect the CBDC, the hype, to die down a little bit, to be honest, because that is.
You're asking for a lot at this point, I think.
Yeah, I don't know. Maybe it had to be optimistic, but I also need to be realistic. There's lots of initiatives out there, but I think that for a large part, there's also a lot of hype out there. That's always the thing with new developments, new technology. So we always have to take a step back and see what ultimately thrives and what turns out to be just a hype and disappear.
Yeah, I think it's not an easy question, to be honest. It's looking into the future with so many dependencies. My hand would be looking at what's happening at the moment. It seems like the region wants to focus on metaverse, NFT, this kind of, let's say, sector of the blockchain, emerging technologies. So if that goes well, I hope I'll visit Dubai in metaverse next time.
Good. Well, that's good. Let's make that happen. And Ahmed, a final word to you. Where's your business going to be here in this region?
Right. So considering the current trends in the market, I believe that the next 1 year would be of great success because we have seen a lot of interest from the businesses here in this region. And it's again just the fact that they are pretty much new. They want to make sure that they have a simplified onboarding journey in place. And that's where we kick in. So I do see some great opportunities. I do see some great, when it comes specifically to the technology, I do see some great endeavors that we are going to mark on in the coming year by Shafti.
Well, we must leave it there. Thank you. Please thank our panelists for this.
Thank you so much to Simon, and thank you to the panelists. Yet another really interesting and relevant conversation, also showcasing. I mean, we live in very progressive times filled with possibilities, but of course, there's so much exponential technology going on, and it's all about, how it's all interweaved together. And by the way, when it comes to metaverse, I hope you all know there is actually a building across the road that GITEX has built to exemplify different actors in the metaverse, in case you want to check that out. So now we're going to transition from the regulatory aspect and talk more about mobile apps. So one could ask, are mobile apps becoming a sort of all-encompassing, one-stop shop platform, or will they remain as a set of independent services in sort of more silos? This is what our next panel is going to talk about. The theme is, will super apps redefine the future of financial services? And to moderate this panel, I say a warm welcome to Che Sidanius, who is co-founder of Global Coalition to Fight Financial Crime. The stage is yours.
Thank you very much. Can you hear me? Okay, so thank you very much for that introduction. I can't think of a more interesting title than Can Super Apps Redefine Financial Services? So we're really talking about some incredible developments happening all across the world, but in particular in Asia and in Europe. And what we'll do is talk about from a retail perspective and the opportunities for a consumer experience or what potentially super apps will do and the opportunities that it represents. And to do that, I'm going to welcome our panelists. If I could welcome first Rushi Shastri from the State Bank of India. Then I'll introduce KRC Murthy, please, from the Kotak Mahindra Bank. And please find your seats. Vivek Sakardi, please. And then last but certainly not least, Vladimir Tatinov. So, Rushi, it's quite a title. Will super apps redefine financial services? And from your perspective, working at the State Bank of India, you could first sort of define what is a super app, what are the opportunities and potential challenges?
Yeah, thank you. First of all, I'd like to thank all the JTech sponsors and holistic for giving the opportunity to present here. So directly jumping to the super app, first I'd like to give the background and I'll try to cover the practical aspects. I don't mostly believe in jargons and all these things, buzz and all these things. So let me try to cover in the practical aspects. When it comes to BFSI, traditionally or eventually it is like involved into deposits, payments, investments, record keeping, cash maybe. These are the attributes. Oh, it was there, still it is there. But eventually it has converted into 3 parameters. That is identity, information, and experience. So if you want to achieve these 3 attributes, you have to get married with the latest state-of-art technologies. And one of the way to achieve this is super apps. Okay, so I'll give you the example. What exactly super app? Let's go with the banking. We have witnessed initially there was an app which was only performing non-financial transactions, mini statement, balance inquiry. Eventually there was another app with fund transfers, bill payments. Then there was upgradation, e-commerce, and a hell lot of players. We stitch in the subsidiary products also. Then we came to know the insurance and mutual funds. All these kind of steps also come. So as an organization, I had now a lot of apps, small apps. So what we need to do if you want to give the end user experience, I have to collaborate all the apps. That is nothing but a super app. Okay. So is it restricted just or confined to banking? No. Like a classic example we have witnessed in our that RTA app in Dubai. Example of super app wherein all transportation has been covered. In medical field, if you club and if you get all sort of services under one place, under one roof, classic example of super apps, and so on and so forth. So it's not a jargon, it's a very basic terminology wherein I get everything and anything under one roof. So that's the basic idea. Same applies to our organization also, wherein we try to club under one roof, under one app, all activities as much as possible, and we are bifurcated into super apps. So that's my basic take from super apps. Further, I will like my client fellow panelists to put on the line.
Thank you. And maybe KRC, same question to you. Where do you see the opportunities? Why did your organization decide to invest so heavily into this? And maybe what are the potential challenges that you're also facing this?
Thank you, everyone, especially all those guys who are patiently hearing us. Thank you for being here. So I come from one of the largest private sector banks in India, and we have actually launched this application almost 5 years back, which we call as a super app, which is termed as a super app now. So what happens is, for my client, it is a convenience which I give, right? When you open an account with me and when you download my mobile app, you just log into my mobile app. You don't do only banking and banking related transactions, payments, etc. You do everything in once. It's a one-stop shop for you. You buy Forex, you're going abroad, you want to do all your banking transactions, done. You want to buy groceries, scroll down, go to the groceries. You want to buy, do some fashion shopping, you do there, right? You want to book a plane ticket, air ticket, a train ticket, everything. Why should I book it through your app? I don't charge any convenience fee. That's the value add which I give to my client. It's basically, and you buy insurance, you buy mutual funds, you invest in stocks of different companies, not only my bank. You can invest in various companies. You can do all your investments, insurance, everything under one app, right? I don't want you to have 50 apps on your phone. The most important thing is you have to think millennials. That's the next gen. They don't have patience, right? It's for them. You have to think 10 years ahead. What is that these guys want? My biggest I learn from my kids. When I get up, they are the ones who actually teach you what is happening, right? I call myself being managing in technology, but when I talk to them, I understand I don't know anything, right? So they teach you what is required. So hear them, learn from them. So that's what we try to do, and we are trying to build more and more. And you can just open an account within 15 minutes. You download my app, fill in all the details, do a video KYC online. The guy will call you on the video. You show your documentation. You are done. You don't visit the branch at all, and everything is on your fingertips. That's what I call a super app. A convenience, one-stop shop, which I don't want you to maneuver around.
Well, it sounds like an incredible improvement from where we are today, where we have, multiple dozens of apps on our phones, and we keep going back and forth between many of them, and just having a one-stop shop for that is quite something. And maybe from your perspective, Vivek, where do you see the opportunities? So we heard certainly from the financial services space, but what other opportunities are there that you see?
Yeah, good afternoon, Dubai. So in India, we use one word, thoda aur. It means a little more. So I think the integration of multiple services in one application is called as a super app, where you can get all the services. Customers don't need to go to the other app, and they will get everything on a single application. In India, like in worldwide, you have Kareem in your Middle East, and then Rappi in your Latin America. In India, we have few super apps like Tata Neo is there, then Paytm is there. So most in this apps, you easily get all the services. You can do the online payment, you can do the transactions, you can do the insurance. Again, you can book a tickets either for the train or for the plane or buses. You can go to the amusement park, just book a ticket by using this application. So just enhancing your customer experience, and customer need to come because retention is very easy in a super app. So that's the opportunity. Your customer is not going anywhere. He's coming back to you now and there. So that's the advantage you have with this. And the way these super apps have a financial model, like they have some commissions. They take all the commissions on all the transactions. They have a customer's data, so they go for the upsell, cross-sell opportunities. So this is the way we are collecting the data, and the way we are doing the upsell, cross-sell is definitely going to increase our revenue and enhance the customer-based data.
And Vladimir, from your perspective, so we heard what's happening in South Asia, which is quite exciting. I was certainly not aware that it's actually quite a mature and fast-growing market. From your perspective, based in Cyprus, what's your experience in terms of opportunities, adoption, and where does Europe stand in terms of this development?
Yeah, actually, I totally agree with my colleagues on this panel. So application and super application become more and more critical at the current time. And latest events that we had 2 years ago with COVID that shows that offline business can stop, but online business grow up and should improve themselves. Even the current situation, when a lot of people traveling between different countries, fortunately it's right now open that we can do this. Everyone could have on his hands something that can help in different countries and different regions to buy, to make credit, to pay for tickets, go to some shop and so on. And what we observe on Europe actually, super app, especially on financial market, become critical to grow business. Because on the same application, you have different options, how you can buy, how you can sell, how you can invest, where you can get the investment, and so on. So, and European community, as well as authority, more and more seriously how it should be regulated, how onboarding process should go. how payment, how fraud control should be there. And each application that goes to this market should take care about this. And from technology point of view, it's a lot of challenges that we meet right now. How you store your data, how you show this data for your clients, how you can be sure that each transaction passed your KYC, your fraud control, and how you can report this to your regulator to be sure that everything on good shape and there is no breakage, there is no data leak that we heard every day actually. And technology-driven company right now looks like is more serious about financial market. And what they can propose is something that we didn't see last year, even 10 years ago. We already mentioned that millennium that becomes more and more financial independent right now is something that drive our financial market. How they behave in this application, actually what we can see in the next 5-7 years.
And what are the challenges, do you think, KRC, in terms of, where we go from here? And I can imagine there's some incredible things happening in India, for example, that you told me about. Maybe you can tell us about the Indian governments, and maybe you can comment on this as well, on ONDS.
ONDC.
ONDC, excuse me. And maybe talk about that, and maybe also discuss, where are we in terms of cross-border capability?
From a challenge perspective, it's a very tight market, Che.
Yeah.
It's a pretty intense competition which is there, unlike any other region, any other sector, right? Banking also.
At times, my exposure is little high if something goes wrong. So that's the only challenge what I see for end user per se. Organization per se, we have been talking, no, the super app is a need of an hour, this, that. But how to achieve that? What are the challenges to achieve or to reach the super app? First and foremost, as I said, if I have a complicated app in front of you, no one will use it. So I have to make sure that has to be user friendly and streamlined. It's very easy to say, but difficult to achieve because super apps, as most of the panelists have mentioned, there are a hell lot of activities. Now I cannot have a hell lot of activities under one frame. So I have to have that design interface in such a good way that it should be easy to use. First challenge. Second challenge. As we again say that I'm going to do A, B, C, everything under one app. That means at the back end, I have to integrate hell lot of applications. Is that so easy? No, definitely no. It requires a lot of effort, lot of fine tuning, and then I will able to achieve the interoperability or democratization of all the services under one roof. So that itself is a challenge. Maybe first time you can achieve it, but over a period of time, you have to patch the application, you have to upgrade the application. Now I need to upgrade the hell lot of integration of bucket of services. Trust me, that's a challenge. Third, if I have a bucket of services, definitely it will come for a cost. Cost means performance. So if I'm giving you an app and which is very slow, it takes a lot of time for processing. Will I use it? No. So I have to make sure I strike a right balance between the performance and the services offered. Last but not the least, security. If I am integrating again all bucket of services, as an organization, I have to ensure that integrity is maintained. That's why I touch base upon my first point. The three parameter is identity, information, and experience. Now, this identity, information, and experience is exactly correlated to what are the challenges I have mentioned. If I overcome these challenges, then I can compete in the place where sir has such a huge competition. I can compete in the market if I'm able to overcome the challenges in a continuous manner. This continuous manner is a bold terminology. Just to launch is not the need of an hour. To maintain, it's the need of an hour. So that's my submission. Challenges vis-a-vis attributes or experience what is expected to end user super app per se.
So let's explore that a little bit, Vivek, if we could. Because I hear potential immense challenges related to cybersecurity, data privacy, and obviously the integrity of the ecosystem when you have to interface with so many components. How do you deal with that? And how do you ensure the regulators and the supervisors are are happy with the integrity of the system itself.
So compliance and taking the approvals is the biggest challenge whenever you go for any super app. For you know that all these super apps based on the how your data integration have been placed in the system, and placing all the data from all the systems, and in fact you have to integrate it from the third party. That's the biggest challenge. Internal data, okay, you can get the compliance approvals easily, but when you are integrating some other vendors data, that's the biggest challenge for you. You have to be sign a lot of contact, and that take a lot of time. Another challenge, like Rishi mentioned, that the integration. Of course, he explained a lot of on the integration parts. The third challenge which I find is getting a right resource and right talent to develop these kind of applications, and how you make sure that how your data is secured. Who will be the owner of that data and how you can own it, that data. Like in my previous organization in the insurance sector, we have developed an application. So normally in general insurance in India, if 90% of things has been the motor insurance in India, and once if someone have an accident, they need to settle. It will take time around 20 to 25 days to settle the claim. So what we had done there, that we integrated this data, we created some algorithms behind the application, and if customer comes and just click the pick of accidental part of a car, suppose the accident happens on the right side of a bumper, they just need to pick and upload it to the mobile app, and behind that we have an application which can take almost just 60 seconds to settle down the claim. So if you can see that from where 25 to 30 days, and here is just come a 60 seconds to settle down. Still, customer wants it should be settled in a more 15 or 20 seconds. That's the expectation of the customers, which of course we had said, but it's not very easy, because for that, in a backend, I need the data from all the car manufacturers, and I need to update in every quarterly basis, because the parts are changing, new models are coming into the market. Again, the pricing are also changing for that. So whenever I have to update the inventory, on base of that inventory, we need to update the data, and that whenever the claim comes to the application level, we need to throw the price to the customer. So suppose if the inventory is not updated, you might go with an old inventory and you can just project it like a $10,000 or $15,000, but actual cost might be 20,000. That claim. So that will be a loss for us. So we need to see that how the things are working. We need to do a lot of testing on that, and again we have to take the approvals to the customers.
Yeah. And Vladimir, same point to you. If you would comment on where you see the challenges are, yeah. Was that? Okay.
Yeah, thank you, gentlemen. Very exciting thing. But let me ask you one very important thing. Let's imagine it is true that a lot of people here have 3 different movie subscription, right? Disney, Hulu, Netflix, whatever. 2, 3 music ones, 2, 3 taxi, food stores, and etc., etc. And nobody wants to combine. For example, if you ask Apple Plus and Disney Plus to come together, they say. So what it will be, the next step, it will be, now it's 5,000 applications, and tomorrow it will be 5,000 super applications, all divided by the camps, right? So one bank, its own application. So how will user choose camp to accept, right? How the user will choose this super application, let's say.
Who wants to take that? You'll take it? Okay.
Hello. Yeah. So 2 aspects. First and foremost, I guess you have given the example how to collaborate. Why will collaborate? Rather, if A is working okay, B is working, C is working, why they will collaborate? Over here, regulators come into picture. UPI, ONDC. Now, private entity, maybe they are not willing to come. No, I'm very happy. I hosted, I'm doing all sort of application. But if you want to achieve that interoperability, someone, superpower, we call it as a regulator or government, they come into picture. They force sometimes that please everyone should come under one roof, and then integration happens. So that's the first thing. Second thing, how to choose, how user will choose. Because say for example, I have 10, 15 super apps itself. Now that depend upon the 4 challenges which I have mentioned. The app, the organization, which will overcome these 4 challenges. If you give a good performance, the user will use it. Or if you just give a good offer, they may use for a 1, 2 or 3 purpose, then it will subsequently drop off. So if you want to retain the customer, that gamification, that reward relationship, and you have to make sure the engagement is maintained, and that can be achieved again with the latest technologies only. So that's what I say, it's a continuous process. It cannot be done in one go. That has to be in a revolving manner, continuous way.
And maybe we'll ask-
I think a fantastic question, right? He asked a very good question, saying that why would I actually want to come onto the platform where I'm killing myself, right? It's there are 10,000 small shop owners, for example. They all will come together on the super app and say, okay, I'm going to go there. For example, Amazon in India is too large, right? They don't want to come onto this platform, but these guys are going to give a tough time to them, right? And as he said, somewhere the regulator also will step in and say, you want to do business, right? You want to actually spread your wings? Please come on to this. Give the fair chance to the customer. Here, the customer is the king. We are trying to give the bargaining power and the purchasing power to the customer. And the government will do whatever they want to do to give the right choices, right? If the mega one doesn't do it, all the small fishes, they will all try to kill the big shark. Yeah, so that's how it is.
So
Yeah,
before,
actually,
before
from
we
my
head-
point of view, yeah.
Yeah, just one minute. So if anyone else has a question or intervention, please. I didn't realize we actually had mics.
And also anyone knows of a super app, something like that, someone can raise in any other countries. Probably we want to learn about it. We don't know, because that will be great if someone has a super app. Someone can put their hand up. I would surely want to speak and learn.
So we have a few questions floating around. There's one over there, but Vladimir, please. Because in addition to that, Vladimir,
Yes,
within
actually-
Europe, you have GDPR on top of it.
Yeah, exactly. So the point is that the question raises very good questions, challenges. The most serious challenge for any super app to be flexible and deliver new functionality as soon as possible. This is the most challenging task for any super app. And in order to make this, for businesses, it's a critical task to make a team that can work together, because you know that compliance took their position, engineering they took their position, they battle between each others, and business just want to deliver something new. And for any kind of businesses right now, it's very important to create a right team who can perform, who can execute and deliver to collect additional clients and get more good experience from the clients.
Because it raises a broader question, right? And we're going to get to him. And I think who's first? Okay. Which is the whole point of how the data is going to be used at the end of the day, right? If you collect it, because the data is the new oil,
It's more about how you can provide the real-time analysis and real-time offers to the customer.
Yeah.
It's all about the customer experience and the
All data. So if something goes wrong, my entire privacy rhythm can go for a toss. So as an end user,
lessons to be learned. But my question is that when you talk about super apps, aren't we suppressing the innovation happening in a small startups which are focusing on a very niche level of services, and then we are repeating the same mistake or same example of what happened in US, in Silicon Valley, where Facebook took over small companies and became a big shark, and it's an end of innovation. So are we going in a direction where super apps are building up and they'll end the innovation of a small companies, be it in a fintech or in a food delivery, where they are very good in what they are doing in one micro level kind of services. Whereas super app gives you 50 options. They may not be the expert in all of them. They are just becoming bigger and bigger and taking over small companies. So isn't this a challenge that we are facing again, what we have seen in Silicon Valley?
Please.
That's a very good question, in fact, Jitin. But I think this is a right time where these all small organizations can come together and go hands in hands. Because definitely this will be a challenge which will be go on and on. But these innovative companies, again, they have to innovate the product and they have to hand over to someone, and then again they need to come up with some new innovation. Because innovation is not like a one time, it's a journey for everyone. So they should come up with these. And of course, it's all about the customer experience. If your small application also giving a good customer experience to a customer, they can definitely do the adoption. And if the adoption is only possible if you have a good application. If it's not giving you enough good experience to the customer, definitely try to go to the super app or some other application. So that's a challenge. If you are not going for super apps, also that's also a challenge in the market, because it's not like all these startups. There are millions of startups coming up. Everyone is coming up with the new products. So that challenge will always be there.
So another point to that is, we are not right, no one is trying to kill the innovation done by a small company, right? Like for example, if I talk about my application, so I'm not building everything. I'm only onboarding you, and I'm providing you an API. I'm connecting to your app. You are the owner of your app, but you are onboarded on my app as a convenience, right? So you, as a small, for example, you are the app owner. You get a base of X million of my customers, right? Right in one app. So don't you want to explore that, right? So the innovations will continue. However, the challenge of the competition will also be there. That's how the world works, right? Whether you like it or not, the competition will be there. If your app is the best, people will come to you. Maintain the standards, and if the super app doesn't work, as he said, if it doesn't meet the security standards, doesn't meet the regular guidelines, no one would go to it. It'll fall flat. It's all about customer convenience. I think both will exist. They have to coexist. The marriage needs to happen.
All right, we'll take another question from here, please.
Hi guys, I'm Paul. I'm looking at a startup that looks at micro investing and savings. I have a question for you about compliance. So when you have a super app, let's say you have an app that offers something on driving, something on insurance, something on banking, yeah? Now, I understand that each of these businesses that are collated would do their own compliance. But what happens when one compliance actually is important for another business as well, and it is not upgraded? Do you cut the customer out of everything? How do you manage compliance? Also, the second question is things like today, which is important, at least in this region, is things like CRS and FATCA, etc. How do you manage the compliance across a huge base of customers, across various businesses, which could ask for different things? So for example, one compliance would be, is your Emirates ID up to date? Or your visa is up to date? The second could be, do you still have a job? A third could be, does your license work? I mean, has it expired? Or various things. So how do you manage compliance across these super apps?
Well, when we say super app as a definition, it's a consolidation of all services under one roof. But at the back end, each application will perform his or own task. Say for example, now let's take a classic example of banking app. In a bank, I'm doing a banking, insurance, mutual fund, and say for example, e-commerce. So my e-commerce application team will do the necessary compliance, regulatory, all sort of stuff in his or her own way. Same applicable to my banking. For example, if I have to onboard the new customer, I will make sure that FATCA declaration is taken, CRS is taken. He cannot just jump on super app and start performing the transaction. In the front end, user may see that all these things can happen under one roof. But at the back end, all policies, all necessary steps is being done. It's being done by all the organization. User may not be aware. Say for example, if I am opting any insurance policy, if I click on that tab, there may be some pop-up or there may be some consent. That is nothing but a compliance. Or maybe while onboarding or while doing video KYC, I enter second factor authentication. That is again nothing but a compliance. So all sort of compliance in a digital manner, if wherever require maybe digital signature certificate, wherever require multi-factor authentication, they are stitched in a smart way, in a digital way, so that user experience is enhanced. That doesn't mean we are not following compliance, at least in the Indian context. I'm not sure about the other apps or maybe the unregulated area, maybe e-commerce also. I guess even if I go for e-commerce transaction, beyond certain limit, I have to opt for multi-factor authentication. There is below it's low limit, I guess I can pass through the transaction. That is again a compliance example. Yeah, the one thing we have to ensure compliance per se when it comes to data.
As I said, that will be a challenge. Over here, there will be a twisting in the policies of compliance, because earlier I was managing certain aspect of the data. Now this is a 360-degree view of my entire customer life cycle. So over there, definitely organization has to put an effort to maintain the integrity. But overall, as in as the compliance has been taken care by most of the organization when it comes to super app person.
But that would need to be streamlined though, right? I mean, in other words, as soon as you onboard a customer, downstream down the line, there need to be some kind of minimum standards across all the...
I'll give you the example of streamlining. Say for example, if someone is coming for account opening. While account opening, I have certain terms and conditions, I have certain consent. Now I have to onboard him for super app. What I will do, as a streamlined manner, I will add one more TNC for insurance. I will add another TNC for cards. I will add another TNC for mutual fund. So while onboarding itself, the consent has been taken. So my compliance has been satisfied in one go for all allied activities.
So to answer your question, your question, how do you? It's again a great question, So this is where the regulators come into place. Like in India, RBI, the regulator who controls all the banks and financial institutions, IRDA for insurance, and SEBI for the markets, right? Equity markets. These are the guys who sit on your head like an hawk. If you're not compliant, they are not in business. Simple. They are very stringent in India. Like any other country, GDPR guidelines coming in, US or Singapore MAS, HK MAS, these are the guys who control it. To answer your question, I think the compliance is headed by these regulators very stringently, and the clients are also, they check what is the rating of this guy who I'm investing with, AAA plus, A plus, or A minus or something like that. They are very intelligent. Customers are very intelligent. So even if I have onboarded that guy onto my app, he'll just not go. He'll just not use it. So I know the metrics of who's using what app. So compliance is basically, very stringently headed by the regulators across the board. Otherwise, they are not in business.
Yeah, actually, let me add some words there. From my point of view, you can consider super app as a data warehouse. It's consumed data from end user, consume data about behavior of clients, what they do, how they do. Did they make some not good things? Is there some kind of wrongs of this client and so on? And if you integrate in new businesses, like from previous questions, some startup, these startups can benefit because they can recognize, okay, this person is something that they are looking at. This behavior, what we expected from them. And the question for super app is how to guarantee data security between super app and these applications that you integrated. And actually, the final decision should be on application side that provide these services. They should have on place their own compliance, and they should make decision on the data that they collect from main application, from super app. And also, they should be ready to provide additional information for this client. Because from this point of view, everyone will benefit. You will provide information about how people behave on your particular case, and you will receive data from other cases as well.
Vivek?
So in our case, if you can see, we have the regulatory bodies and we have internal clients. So of course, from the regulatory bodies, we have to follow that. Like in India, we have IRDA, SEBI. But when compliance comes from our client side, that's the challenge for us because we have a different clients, data stored in our different servers and different data marts. We have a contract with them that we cannot share data either. In fact, we have a contract that we only share data with a Google or Azure. So when these kind of challenges comes, we have to make sure that whenever the application is hosted, it should either on a Azure or on a Google. So that's the biggest challenge for us, but that we have to make sure that, okay, what kind of a contract we have, and we have to take care of these processes whenever we're hosting our application on the cloud.
And how do you deal with data privacy and data localization, right? Because there's a number of regions in the world where you actually have to store if you want the data itself in the country that you do your business in terms of how that affects cross-border, and if you have an Indian citizen living in Dubai or in France or what have you. How do you deal with those issues?
Yeah, so being a chief data officer, that's the biggest challenge which I have faced. In fact, not about the cross-border. In fact, inside your organization, if you have multiple groups in the organization, suppose you have a one big group like a Reliance and you have a multiple groups, subgroups in that also you cannot share the data. So, but we have to see that which data we cannot share. It's not like that all data you can't share. You have the customer data, you have the financial data, that only you cannot share inside the organization or outside the cross-border. So that things, either you have to mask the data or you cannot share it outside the organization, outside the app. So that things can be taken care by us, that we make sure that that should not go outside our atmosphere. In fact, most of the time the threat is not from the external, threat is from the internal stakeholders. So we have to see that who have the access of data and take the proper approvals, and that's yeah.
Okay, so I'm just conscious we have about 5 minutes left or so. Please don't hesitate to raise your hand if I can't see if any other comments or statements. And maybe what we could do is close up in terms of closing remarks. Where do we go from here? What is next year going to look like? Where, clearly it's been a point made that in regions with a young demographics, has potential great opportunities in terms of their expectation of the user experience, and maybe we can go down the line starting with Rush. From a year from now, where are we going to be?
Yeah, as I said, there is a paradigm shift. Earlier, there was something called services were confined to certain individual services. Now we are saying something to integration of all services. I guess going ahead, what I see, maybe there will be bifurcation between the premium, basic, and sort of kind of stuff, wherein users or services will be bifurcated within the app for special privilege customers, special privilege premium customers, something like that for the engagement of user. That's what I see in the next stage of generation.
I think the coming months and years is going to be very exciting. A lot of things happening in a very short span of time, as I mentioned earlier. The technology is, leapfrogging so much that we are not able to, hold it. And biggest thing is talent. Holding the talent, and getting them to service us is a problem. It's the world of millennials, so think millennials and launch the products. Don't complicate it too much. Keep it simple because the customers want a simple one. Don't put a lot of jargons and all. Just make it very simple technology, easy to use, convenience. That's what we are talking of, super apps, right? And building is easy, but as he rightly said, maintaining it and making sure the compliance is adhered to. There are no leaks of your data or no leaks of security issues. That's important. That's what all banks are about. So go slow, no problem. Let others launch. Take your time, but build a robust application, whatever you want to do.
Thank you. Vivek.
So it's all about digitization, making things simple for the customer. Next 5 years is for AI, blockchain, IoT, and super apps. So be eye on that.
Thank you.
Actually, totally agree with my colleague as well. And from my point of view, the future actually decentralization in terms of financial service, in terms of regulation, and so on. And as we see, millennium people became more and critical for financial sectors. And as we observe right now, Web3 tokens, metaverse became a part of our economy. We have to accept this and make some products that reflect demand from the clients.
Fantastic. Well, we'll conclude with that, almost right on time as well. So please join me on thanking our great panelists for their interventions. Thank you.
Just being so patient here. Thank you.